I'm Steve Spencer from SMB Capital, and today I'm going to review a recent trade setup. And so this is, for short-term traders, this is a great risk-reward setup. Both intraday traders, whether they're scalpers or intraday trend traders, and swing traders can take advantage of this setup, which is pretty cool. Many setups don't translate into different time frames. So I kind of want to walk you through some of the criteria to look for this setup and maybe go through a little bit of trade management and risk management. So what I'm calling this trade is it's just a multi-day breakout with a fundamental catalyst. And the example we're going to look at right here is Facebook. Here are some of the key criteria you can look for. Number one, a stock that's recently had a large trend on the daily time frame. In the case of Facebook, in March, there were some big negative stories related to data breaches, their data being used by unauthorized vendors to share with a firm called Cambridge Analytica, which apparently maybe there was some stuff with the Russians involved, and it was not good news. And you could see the negativity building on social media, in particular on Twitter. And when that catalyst came out, actually it might have been, if not my favorite idea from March, one of the top 2 or 3 in terms of a short trade. Anyway, the stock had been beaten down, was down about 9 or 10% over the course of a couple of weeks, and then started to kind of move sideways a little bit after that big down move coming into April. And after that, something like that happens, we'll look for a reversal trade, but I want some sort of fundamental catalyst. And so we'll take a look at that when we get into the charts. I want risk reward better than 5 to 1, meaning for each unit of risk, I want at least 5 units of upside. And then I want to use support and resistance levels on the higher time frame. I put on the bullet points there daily, but really should use like a 5-day or a 10-day, 30-minute chart. That's going to give you the points of potential resistance as it moves higher. And then also, once you have the positive catalyst, quite often that'll happen outside of market hours, so the stock will gap higher. And so we're going to also use that multi-day 30-minute chart to identify, as it starts to pull in better entry points, potential support. And then the other thing is, as this setup occurs, we don't know. You have the initial catalyst, which causes it to gap higher. We don't know when the larger move is going to happen. Is it going to happen on the first day, the second day, third day? Quite often, you'll get that catalyst, you'll get a couple of days of consolidation, and then you'll get a breakout move. And by managing it, by identifying the important support and resistance levels initially when that catalyst first happens, you're going to be in a position of strength if a larger breakout move happens after a few days. And so let's take a look at a few things. Number one, here's a picture of the downtrend that happened in March. So you can see it gap down from the mid 180s. It trended down for a couple of weeks before it started to move sideways. So that's a big move. Generally, rule of thumb, I don't think I put it in any of the slides here, if the stock comes off from 185 down to 150, it's about a 35-point down move. A 50% retracement after the positive catalyst happens is pretty normal. It might be a little bit less, it might be a little bit more, but 35-point down move. So from the low, rule of thumb, a move back up to 167, that's gonna kind of give you a reasonable upside target area. It could end up being a little bit less, a little bit more, depending on the levels we can identify. That's going to help kind of inform the percentages. Some people like to do these fib levels, and there are certain percentages. What I like to do is kind of use 50 as my baseline, and then see are there important potential resistance before that area, maybe a little bit above that area, and that's going to help how I manage the trade as it bounces. So here we go. Here's a look at it. Here's the multi-day. I believe this is a 30-minute chart. I'm not wearing my glasses, so I can't see it quite as clearly as I'd like. But so we're looking at, right, the circled area after the close one day. I think this was last week. Zuckerberg came out and said, we're not really losing many advertisers. The numbers still look pretty good. I was waiting for this, for either Facebook to say this or an analyst to say this who had looked at the numbers. For this type of catalyst, because we had the big down move. It had already started to show some bottoming, double bottoming in the low around the 150 area, and was moving a little bit higher. And then that catalyst happened. You can see in the after hours, it shot straight up. The blue line there that I drew was prior to that fundamental catalyst, the 2 days before, you notice it couldn't get above 157. Then the next day it couldn't get above 157. So we have that as an area, it's up at 160 after the catalyst, but the next day on what we call day one after the fundamental catalyst, if it comes in there and holds, that's a really good entry. That was the first time I actually entered. I entered probably a little bit higher than there initially, but I also used that 157 as a spot to get long against 156. I don't know on day one, is it going to bounce from there and go back above 160 and then beginning of a bigger move, or maybe it'll retest on day two, etc. And then you can see it was important enough, that catalyst, that it was our number one stock in the morning written game plan. We do a morning meeting before the market opens every day, and I talk about the top 2 or 3 in play stocks. We talk about the best second day in technical plays, and this was the number one idea on day one. So that gives you an idea of how important I thought this catalyst was. So as the days unfold, as I said, you don't know, is it day one, is it going to break out above 160, 161 resistance and go to the mid 160s? Day two, is it going to happen? Day three? It turned out that this one touched that 157 on day one. It touched it again on day two. Day three, I think right on the open maybe. I'm having a little trouble seeing that. I can't tell if it spiked maybe at the end of the day. But on day four, we actually had a second catalyst, which was Zuckerberg going to Congress to testify. So we've had now 3 days of consolidation. We have potentially, we have people accumulating it between 157, 158 over the course of a few days. And we also know 160, 161 is where it failed on day one. Just from a trade management standpoint, if you buy it initially on day one and it goes from 157 to 160, 161, that's where you do want to take off at least 50% of your position to kind of manage the risk, be in a position of strength if it comes back down to 157 again. When on day four, when it has that catalyst again, where he's testifying, what you're looking for is a surge in volume, a move above that top blue line, a consolidation above there, and then that's where you can look at getting to the target areas. So let's zoom in. Before, I wanted to just point out when this did actually 157 showed itself as support. After day 1 and 2, I did tweet it out to let everyone know. You always want to, if you see a really good setup, you're going to share that with the people you trade with. I also tend to take those best pieces of information and put them out there on StockTwits and Twitter. And so I'll give you a heads up on day 2 that prior resistance was holding as support. It touched it 2 more times, so everyone in the Twitter sphere had a chance to take advantage. And then finally on day 4, I gave a little bit of a longer tweet explaining why I was sharing that information. Because as I was tweeting this out, we had moved higher on some volume to the 162, and I say it right there in the tweet. The reason I'm talking about 157 and we're long it on the desk, and that's where you're accumulating, maybe even putting on your out of the money call options, is because now when it starts to break out, if it's not a clean breakout, it's not a big deal. You've already bought it a few times in the 157, 158 area. You already sold a couple of times into 160. If you now buy on the breakout, which many people did on the desk that morning when it showed strength, and we'll zoom into it, you're in a position of strength. And so here's day 4. Here's the zoomed in chart. And you can see right on the open, and this happens so many times, where on the day of the catalyst, the day of the real breakout, they drop it out very quickly on the open. Then you see the strong opening drive, and then you see the consolidation at 160. And I can tell you, most of the momentum traders, if not all of them on our desk, who are focused intraday, were long. They saw the strong opening drive. They knew that Zuckerberg was going to testify on this particular day, and they're long there. And one of the best traders on our desk, who makes a lot of money, actually told me he was long call options. And that move in the middle of the day when it came down into 159 caused him to kind of to lighten up. Now, if he had been in from 157 on those call options or 158, he probably would have been a little bit more conservative in terms of holding them for that afternoon move. So just zooming in, we go to the afternoon. One of the things I can tell you always has predictive value for intraday trading. If you see a huge surge in volume and the move takes out the morning high, that's quite often going to be a clean breakout. It Didn't have to work out that way. It just turned out that it did. The volume came in, it broke out, it got above 162, went to I can't see the chart. I think it got to 165, 166. There was more follow through the following morning. So again, this takes you through the entire time frame from the day the catalyst happened to identifying the important levels, and then on the day where it actually broke out. So you want to be in a good position when that breakout finally happens on day 4. And you want to be in a stock that's recently had a large move, in this case, a large down move, then a catalyst in the opposite direction, where you can look for a retracement from 40 to 60%. You have your positive catalyst, use the 30-minute 5-day chart, spot your support and resistance levels, and then use resistance to manage risk, meaning if you're getting in there at 157, 157.5, and it goes up to 159, 160, take off 25%, take off 50%. If it doesn't hold those higher levels, even hit out of some more. Use those resistance levels that have been established in the prior few days and understand until the stock is holding above that resistance, until it's consolidating above 160 and then breaking out above 162, there's still some people that are nervous. There's still some people who are going to maybe short it because they're not convinced. And then take advantage, be an advantage that you're up a bunch of money when it finally breaks out on day 4. You can put the pedal to the metal and not worry so much about a little jig before the $3, $4 up move. So that is it. Here's my email, here's my Twitter handle, here's the blog where we share these ideas and these reviews. Hopefully you learned something.